Hey guys, welcome back to the channel. If you're new here, I'm Tristan, creator of ChartInspect.com. Today I want to show you a new chart I recently added to ChartInspect that I think is one of the most simplest but also the most powerful ways to understand sort of where we are in the market cycle for Bitcoin. It's basically called the days above or below the realized price. So as of January 25th, 2026, Bitcoin has been above the realized price for 1,109 consecutive days. And so you can look at this through the realized price, but we can also switch to the short-term holder cost basis. So when we do this and when we look at it through this lens, we can see that we've been below the short-term holder cost basis for 90 days straight. And so today I want to show you why both of these readings sort of matter, and you can also look at it through different metrics for now. So this chart is really simple. Basically, whenever green bars are basically representative of being above these key on-chain levels for Bitcoin. So green bars obviously represent consecutive days closing above, so Bitcoin closing prices. Those are basically closing prices above the cost basis. And on the flip side, red bars represent days below the cost basis on chain. And so, like I said, you can toggle through different comparison metrics. So you can look at the realized price, the true market mean, the short-term holder cost basis, long-term holder cost basis, active realized price, MVRV mean, and the realized price, of course. So right now on the realized price view, Bitcoin is currently at 89,200. The realized price is at $56,000, and currently we're 59.3% above the realized price. And we've been in the green, above the realized price for around 1,109 days now. So the realized price is basically the average cost basis of all Bitcoin in circulation. So when we're above that level, the network as a whole, in terms of looking at the blockchain on chain, all the transactions, everyone holding Bitcoin, when we're below that level, the network is in loss. So simple as that, right? So this chart is pretty powerful historically speaking. If you look at the red zones here, these extended sort of periods below the realized price, we saw this happen in of course 2011, in 2015, 2014, in 2018, 2019, as well as in 2022, right? So Bitcoin spent hundreds of days below the realized price, approximately 195 days in July of 2025, around 133 days in March of 2019, around 67 days, but we had sort of periods where it went above and below, right? So cumulatively, it was probably over 100 days spent. And then in 2011, of course, it was around 99 to, 102 days. So right now, we haven't really sort of seen that break below the realized price like we have seen in prior cycles. So every single one of these extended red periods, 100 to 150 days below the realized price, has historically marked a generational buying opportunity every time for Bitcoin. And so if we look at where we are today, right, this green line sort of keeps building up right here. So what that tells us is that, despite all the volatility we've seen, the October all-time high at $126,000, the 30% pullback subsequently from that, the tariff fears that we've seen throughout this entire, cycle for the past year, the Greenland drama, past week with Trump backing off his threats, we're still in what I would call, bull market territory by this metric, in the sense that we've spent, a long time above the realized price. From a general cycle standpoint, I do think we're in a bear market, right? Overall, the network is still an aggregate profit from an on-chain perspective when we're looking at the realized price. But if we look at the true market mean, for example, this tells a slightly different story. We've been extended above the true market mean on a closing basis. We did close a little bit, basically closed a little bit below it, I think, back in November. But what's interesting here for the true market mean is that in prior cycles on this metric, the true market mean is a tighter, more sensitive level than the realized price. You can see more oscillation between the the green and red, especially between 2018 to 2019 and 2021 to 2022. We tested and briefly dipped below the true market mean back in November when we hit 81,000. That was a close call, but we held it and bounced from that level on a closing basis, which is why we haven't seen a red reading on this metric yet. So right now we're 10.6% above the true market mean. With a 10% cushion, we're still in, we're not in immediate danger of closing below it. Although I do think we will break below $80,700, which is where the true market mean currently sits, and stay below it. That would be, the first warning sign that the market structure is sort of shifting perhaps down to that realized price level that we've been talking about for quite some time. And so I do think another interesting metric that we can compare, look at in this way is the short-term holder cost basis. When we're looking at it from, a shorter term time frame, the picture sort of changes dramatically, right? Right now, the short-term holder cost basis sits at around 96,500. It has dropped quite significantly over the past couple of days. It was at $98,000, and now it's subsequently dropped to $96,000. And right now we're negative 7.5% below the short-term holder cost basis, and we've been below the short-term holder cost basis for consecutive 90 days or so. And so the historical pattern that comes from this chart is looking at when Bitcoin spends extended periods, 100 to 200 plus days below the short-term holder cost basis, like we saw in 2015, 2019, 2022, 2011, we spent around 150 days or so. Every single time that marks either a bear market low or a local bottom for Bitcoin. So in 2015, we spent months below the short-term holder cost basis during that bear market. In 2018, same thing. 2022, same thing. And on the flip side, in bull markets, Bitcoin tends to stay above the short-term holder cost basis for extended periods of time without ever dipping below it, or at least getting, a bounce back above the short-term holder cost basis within a couple of weeks or so, right? So if we look at 2017, for example, and in 2021, 2020, we saw these big green triangles sort of building up throughout the entire bull market. And then once you break durably below the short-term holder cost basis, that is, when you're in for a more, sustained bear market, right? So right now we're at 90 days and counting below the short-term holder cost basis, which is more time we spent back in the April pullback and the September pullback back in 2024 and 2025, which is significant, which, I think if you look at 2021 as well, we spent around 84 days, 85 days, give or take, below the short-term holder cost basis, which is in fact, less than what we've seen now, which is telling in my opinion. So what this metric is telling us is that short-term holders, people who bought in the last 155 days, are underwater on average. They're in loss, right? So until we reclaim that $96,000, $97,000 level, this metric says we're in a bearish phase. So let me sort of synthesize what these three sort of views are telling us recently. So on the realized price at $56,000, we're still around 60% above it, over 1,000 days in the green. By this metric, we are getting overextended in terms of the amount of days that Bitcoin has historically spent above the realized price. So for example, in 2018, we spent 1,122 days above it, and currently we're about 11 days below that. So who knows, in the next 11 days, we could start to see perhaps a shift down to this level. That could happen, but we do see that in the true market mean, which is a more refined version of the realized price, you have seen increasing time spent above the true market mean over each cycle. So historically, that could occur for the realized price again, where we sort of spend more time above it than we do below it, which I do think is a realistic standpoint, a realistic viewpoint to have. Like I talked about in my last video, I do expect a lot of these metrics to break. not in the traditional sense, but more so in the directional sense, where we sort of perhaps dip right below to the realized price and then sort of get a bounce above it, and that marks a low for Bitcoin, like we saw in 2022 in the pandemic crash. We sort of had this small dip below it and then essentially a bounce back above it, right? You don't necessarily have to spend 200 100 plus days below these levels to actually see a bear market bottom form for Bitcoin, right? So my interpretation overall, looking at these three metrics, we're sort of in this transitional phase here for Bitcoin. The macro structure, the realized price, the true market mean, all these other sort of on-chain metrics have been overextended for quite some period of time. The short-term holder, from a short-term holder, dynamic, the short-term holder cost basis, we just recently had a rejection from that level. That is pretty bearish in my opinion. And this is exactly what you'd expect, and what I've been, sort of calling for during a bear market within a larger, this sort of larger drawdown that we've had over the last couple of months here. For the bullish scenario, we would need to reclaim the short-term holder cost basis above $96,000 to have any sort of, any sort of confirmation that any sort of bull market would be intact at this point, which I personally don't see a high probability chance of occurring. For the bearish scenario, I think you break below the true market mean over the next couple of months. If we break, towards the true market mean over the next couple of weeks, then you could potentially see prices lower going down into the realized price. And that would sort of confirm a full bear market similar to what we saw in 2015, 2018, and in 2022. But you could also see something, that you could also see something that you see in 2019, for example, in 2020, where you sort of get this mild phase of being above the realized price and then sort of breaking back down below it for like, a couple of days or so, and then sort of getting a bounce back above it, right? And then continuing on after you see that low sort of form here. So that's the days above / below the realized price new metric. It is live on ChartInspect.com. You can sort of toggle between these different metrics here. So if you guys like the content, drop a comment. Do you think we reclaim the short-term holder cost basis, or do you think we have more downside to ahead? I am curious what you guys are thinking. I read all the comments below. So if you guys are interested in the website, check out ChartInspect.com to track all these metrics and more. Join the Telegram if you haven't already, and I'll see you in the next one. Bye.